Overall, this was a much slower week for the housing market than recent weeks have been. Inventory, new listings, sales, and prices all dipped this week. The autumn seasonal decline is upon us. We had a big, crazy week with the election, and obviously that delayed some listing and sales activity. Plus, we've had spiking mortgage rates. And it's actually not uncommon for housing activity to dip in the first week of November and then rebound a bit in the following weeks. So, given the confluence of trends right now, I do expect inventory and new listings to rebound up again before the end of the month. Now, I'm now looking forward to 2025 when the data comes in each week. Now, I have questions on both the future of sales volume and of home prices. We'll release the Housing Wire 2025 forecast paper in the next week or so, where we'll lay out all our expectations, all the scenario, and all the data to track for the real estate market in the coming year. So stay tuned for that. I'll let you know when it's available. We also have our webinar this Thursday, November 14th at 10 a.m. Pacific. We have a bunch of important things to cover. We'll dive into the 2025 forecast for inventory, sales, and prices. There's a big disparity between the housing markets in the Midwest and the Northeast from those in the South and Sunbelt states. Lots to cover. So if you're not registered for that webinar, you can still save your spot. There's a link in the description below to register. So click that, register, save your spot for the November Altos webinar. That's this Thursday, November 14th at 10 a.m. Pacific. I'm Mike Simonsen. This is the housing data for the first full week of November 2024. As I've said many times, rising interest rates creates rising inventory. So rising rates slow demand for homes, and when demand slows, inventory grows. And this has been true all year long, starting in the fourth quarter of 2023. At that time, mortgage rates rose from like 6.5% to 8%, and inventory spiked. Those high rates and rising inventory trends persisted for most of 2024, with only a little reprieve in like September of this year. But we're also at the seasonal decline time for the housing market. And so it's really hard for inventory to climb past Thanksgiving. But we have 2 more weeks where I expect more inventory of unsold homes on the market. This week, though, unsold available single-family homes inventory around the country declined by about 2% to 722,000. That's as the election week really delayed a bunch of new listings on top of a few sales completing and what seems like a fairly high number of withdrawn listings right now. So these all coincided, and the total homes on the market declined. Any new listings delayed are now listed, and that's why we'll see an inventory rebound when we do the video next week. 722,000 now, and I'm expecting maybe 728,000 or so unsold inventory on the market next week. People only delayed listings for a few days, and buying conditions are worse than they've been recently. So there are now 28% more homes on the market than a year ago. Inventory was still growing each week in November 2023. And remember that 2024 inventory had been as much as 40% above last year, and now it's 28% above last year. When we compare to 2019, pre-pandemic, there are 20% fewer homes unsold now on the market across the country than in 2019. The gap with that pre-pandemic era is closing. So in the webinar this Thursday, I'll share our forecast on the 2025 inventory, and it looks like 2025 may be finally the year that we get close to the old normal levels of unsold homes on the market. So join us Thursday for those details. We counted 49,000 new listings, single-family homes this week, which was a big decline from recent trends. That's probably, like I said, just a one-week dip due to the election. And as I mentioned, I expect a bit of a rebound next week to maybe 55,000 or so. But for this week, the new listings count was down like 20% in a week. There are fewer new sellers this week than last year for the first time in a long time. And while it's a notable week, it's just 1 week, and we expect it to bounce back. So it's not suddenly a trend of dramatically fewer sellers. We have two more full weeks before Thanksgiving, and it'll be in December before we see the big dips for those holidays. In the chart here, you can see the pattern, the gray lines from the previous years at the right end of the chart, the big dips in activity that come for Thanksgiving and Christmas, New Year's weeks. The red line from this year has been moving slowly away from the pandemic lows and towards the old normal levels. So this week's big dip, notwithstanding, we're on that trend. So now looking into 2025, with the expectations of continued growth in seller volume, more sellers, greater inventory is a trend for 2025. Keep your eyes open for that. If home sales are going to grow in 2025, the red line here with these new listings will have to start trending higher rather than lower starting in January. I expect that growth. I don't expect a flood of too many sellers. The growth in sellers comes because we're now finishing 3 full years of elevated mortgage rates. And the longer we go, the more homeowners feel compelled to sell in that environment. So sales activity and inventory should continue to climb next year, especially with the recent upward trend in the cost of money. So on to the sales volume metrics. The sales rate dipped along with the new supply rate this week. We're looking at the newly pending contracts here. So we counted 51,000 new sales started this week for single-family homes, plus another 10,000 condo sales contracts. So that pace is down notably from a week earlier. And in fact, we counted 2% fewer sales this week started than the same week last year. But like the new listings number, home sales, the transaction counts has been slowly running above the previous 2 years. So I'm not sure it does justice to illustrate like this week's one big dip, which is likely due to an unusual event like the election. So in this chart, we've illustrated the recent average trend to smooth out some of that weekly noise in the sales rates. So I'm using a 4-week rolling average here of the newly pending home sales. And that recent average is 58,000 single-family home sales started in a given week. And that's averaging 10% more than recent years in November. One poor showing week breaks our streak. We had a 10-week streak of year-over-year home sales growth, but it doesn't reverse the trend. So on the other hand, with mortgage rates shooting up, and maybe this autumn is now shifting back into low sales mode. So we've been disappointed with head fake recoveries a bunch of times over the last 3 years, and a reversal of sales growth trend is not off the table. So while I still expect a rebound in the new pendings count for this week of November 10th, if we don't get one, that'll be a clear signal from buyers. So stay tuned. Home prices dipped with the market activity this week also. The median price of single-family homes that started contracts this week, those 49,000 new pending sales, dropped by a couple of percent this week. So like sales and inventory and sales volume, I expect a rebound in the prices next week. Still, by this measure, even including the big dip this week, home prices are up 4% above last year at this time, at $380,000. So like I said, I expect prices to rebound a bit with a bigger volume in the coming week. But if that doesn't happen, that'd also be a signal that this quarter's steep jump in mortgage rates are taking a toll on home buyer demand. You can see the recent sales price trend in the chart here. So this chart is tracking the median price for all the homes that go into contract in a given week. These are the new pending sales that will complete in 30 or 40 days. So watching this, you get the earliest proxy for sales that will happen in the future. You can see this year's dark line has stayed elevated compared to the last 2 years since August. You can see this week's dip and why I expect a bit of a bump back up next week. We are comparing home sales coming in at $380,000 now versus $360,000 or $365,000 a year ago. If demand falls off, it could be that prices settle down closer to last year. That would be an abrupt change from the trend of the last few months. It's not out of the question, so we will keep watching for that potentiality. So while home prices ticked down this week, it's probably due to that lower activity week overall. And one way to check that assumption is to look at the price reductions levels. If sellers are accelerating their price cuts, that would be a weakening signal. But in fact, price cuts ticked fewer this week again. So we're down to 38.8% of the homes on the market with price cuts. That's fewer than last week and fewer than last year. We use price reductions as a leading indicator of future sales prices. So while 38.8% is still more than normal, which tells us what we already know, and that is that the demand for homes is still weak, the trend nationally is for fewer price reductions this fall. Recently, as homes have sold or been withdrawn from the market, the percentage of listings that have taken price cuts from the original list price is ticking lower. And that tells us that the current expectations of buyers and sellers are lining up for essentially continued price resiliency in 2025. There aren't any signals in the data that show home prices falling dramatically nationally. That means as we look into 2025, it seems like we're lined up for another year where things like affordability stays very difficult. When you focus on affordability specifically, it's hard to imagine how home prices can stay elevated. However, home buyers are stretched, right? As long as prices stay high, that demand will stay limited. There are some forecasters who use affordability as a guide for assuming that home prices will fall in 2025 and 26. And at Housing Wire, we're about to publish this 2025 housing market forecast, and we'll actually cover those perspectives. The details for all of our expectations for the coming year are in that paper coming soon. If home prices are going to adjust down in 2025, a few things will have to happen. We'll have to see the sellers piling up, which we don't really right now. We'd have to see build in inventory. We saw some build in inventory in the first half of the year, but prices stayed more resilient than I expected. Then, once inventory builds, and if weekly seller volume falls, then we should also see a rise in price reductions. Again, earlier in the year, particularly in June, July period, it looked like that downward price momentum was forming. And you could see here at that time, middle of the year, right in the middle of the chart, the dark line of price reductions was above any recent year. And in fact, home price appreciation slowed this year, but it didn't drop. So that means right now, as the price cuts curve tends lower, the signals are pointing to that continued resistance to lower home prices. So we have lots of 2025 forecasting to cover. We'll have the November webinar this Thursday, November 14th. There's a link in the description below to register for that. We'll also have the official Housing Wire forecast paper released very soon, so you can track all of the details and data. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you dive into your local market and help you start helping people understand the market today. So link below for that. Thank you.